Hi there, and welcome back to your Daily Market Podcast. My name is Maryklaire Pelk, and I'm the Director of Operations for the GCU Finance and Econ Club. I'm here with Charlie Hurst and our special guest, Carson Zimmermann. Why don't you guys go ahead and give us a quick introduction?
Hi, I'm Charlie Hurst. I'm also the Director of Operations for the Finance and Econ Club, and I'm a freshman.
Hi, my name is Carson Zimmermann. I am a freshman here at GCU, and I'm an operations assistant here in the Finance and Econ Club.
Great. As per usual, we're going to be going over how the market moved today, as well as we're going to be talking about Roth IRAs and what that is and how we can use them as college students. So let's jump right into it. Looks like we were in the green today. The S&P was up 0.62%, the Dow was up 0.58%, NASDAQ was up 0.83%, and looking at oil prices, they were up 3.7%, or to $97.90 a barrel. So that's the only one that we have a little bit of a downside here, but overall the markets were up a little bit. So let's talk about why that happened.
Yeah, so yesterday, obviously, the big one being oil prices, and they were down, I think, close to 12% yesterday. But now they're up 3%, like you mentioned, or a little bit above that. And I think that's due to, obviously, when the ceasefire got announced, oil prices dropped that 12% because oil is going to be going back down in price and getting cheaper. And now it's back up about that 3.7%, like you talked about. And I think that's due to, obviously, the now talks of Iran getting upset that Israel supposedly broke the ceasefire deal. And now we're back into that conflict.
Yeah.
Yeah, I think that could also be due to the fact that Trump just made a post that Iran is possibly putting tariffs on the oil tankers that are going through the strait. So hopefully that's not true and that we can get the ceasefire still to keep intact.
Yeah, we got to get these gas prices back down.
Please.
So we talked a little bit about the global picture. Is there anything else you guys are seeing going on, or any opportunities or risks that you've been keeping an eye on?
Yeah, I personally just think there's a lot of confusion in the markets right now. And I think that's mainly just due to the volatility, and it's just really unpredictable. So obviously we're in a direct conflict with Iran, and things get confusing when we have supposedly a ceasefire getting announced the night or Tuesday night, Wednesday night, one of the two. It was Tuesday night, sorry. And then Wednesday morning during the day we get announced that Iran is now upset about the Israel confliction, about how they broke the ceasefire deal. And then now we're getting reports that the ceasefire deal's back on, and this is just in a 2.5 day time frame, and it's just super confusing for investors, and it's like all over the place. They don't know what to do.
Yeah, definitely. I think another thing was with Israel and Lebanon, how Israel broke that. I think we should just hope right now that the ceasefire stays intact and that it goes longer than 2 weeks, which was the initial thought process.
Yeah, we've definitely been seeing the market move up and down so much over the past few weeks and even few days specifically, as it seems like things are just bouncing back and forth day after day. So I feel like that just about wraps up our global viewpoint. So let's move into our Roth IRAs. So what exactly is a Roth IRA in simple terms?
Yeah, so what a Roth IRA is, it is an investment account where you can invest in stuff like ETFs, mutual funds, basic stocks, anything you really desire. And what's great about Roth IRAs is that the money grows tax-free. So when you pull the money out at a certain age, you'll not get taxed on that money.
Yeah, and one of the questions I have for you is, when you pull this money out, isn't there a certain age that you have to pull it out by to where it is tax free? Because I'm pretty sure you can do it once you're retired and then it's
Yes, I believe the age is 59 and a half.
okay.
So once you are after that age and you had to have the Roth IRA for 5 years, then you can pull out money tax-free and without any fees.
And then if you take it out before it, then it is taxed, correct?
Yes, it is taxed and it can be subject to fees.
Got it.
So how is this different from a traditional IRA or even a traditional brokerage account?
Yeah, so traditional retirement accounts, when you pull the money out at a certain age or in retirement, you are going to get taxed on that money. But with the Roth IRA, obviously you're not going to get taxed on that. And what's great about that what's great about a Roth IRA instead of a traditional one is, let's say you're in a lower tax bracket now than you will be when you retire. That's why a Roth IRA is definitely beneficial, because if you think you are, then you get taxed on the money that you put into the Roth IRA. It gets taxed before, and that's based on the tax bracket that you're in currently.
Hmm. So when is it taxed? Is it taxed right when you put it in, when it makes any sort of gain? Is it taxed in the year where, like when we normally pay our taxes in April? Do you know how that works?
I believe it's when you when you put money into your Roth IRA, you get taxed on that money.
Interesting. So why is it such a popular tool for beginners and young adults? And would
Yeah.
you recommend it?
It's especially helpful for us because right now we're probably not in a high tax bracket, versus when we are going to be retired. So that's why it's beneficial to get taxed on the tax bracket we're in right now instead of when we retire.
Yeah, and I think another thing to touch on as well is it can act as a savings account for us as well,
Mm-hmm.
because when you put that money in the Roth IRA, you're not going to be able to touch it.
Mm-hmm.
So if you put it in there, then you obviously have it as like a safe way to not touch this money, but it is going to be invested.
Yeah.
So that's one of the key components of it.
So obviously getting invested young and starting these accounts young is going to be such a benefit to us. Do you have a picture of what that might be, how it might look if we were to start contributing?
Oh yeah. So you could go to your bank, you could go to a credit union, or you could go to investment companies like Vanguard, Fidelity, um, Charles Schwab. You go there, you submit an online application, and then they see if you are eligible. I believe the threshold is if you are single and you are filing by yourself, you can't be making over 168,000 a year, I believe. And if you are married and you're filing with your partner, then you can't be making over 252,000. It's around there. If you are making over that, then you are not going to be eligible for Roth IRA. But yeah, and then if you are eligible for the Roth IRA, then you can connect your bank account to it, and then you can start putting money into it and wherever you desire.
Yeah, and that's the one component too. So opening it is one part of it, and then actually investing the money is the second part. So as far as the investing part goes, the most important thing is diversity and having a diverse portfolio. So not spreading it into just a single sector, having multiple different investments. So if you're going to invest in the top 500 companies in the S&P, you might also want to expose yourself to the Nasdaq, which is a bunch of technology companies, or the or even like an energy sector as well. So having a diverse portfolio, so you're hedged against like the energy. So say energy's going up like it has been, obviously oil prices, then the Nasdaq and the S&P are going down, then you have a hedge against it and you're still making money in a way.
Certainly. Another thing that we talk about quite a bit is dollar cost averaging.
Yes.
I believe that's what it's called. Do you want to explain what that is too?
Yeah, so dollar cost averaging is probably my favorite term in finance. I just love talking about it because it's probably the best way to invest your money because you're doing it over a time frame. So say in a single year you want to invest $10,000. You're going to start in the first month by say investing $500 to $1,000, and then say the market goes down 5% the next month. Now you're getting it at a cheaper price. So you're averaging that high price and the low price to get a certain point, and then now you're having an average price. So then when the market goes up, you're going to be making more money. You're buying it at the high and the low of the market, basically.
So you're basically just not putting all of your eggs in one basket when you
Correct.
pick one specific time to invest in the market. Instead, you're spreading it out over the course of a few months to get the average of what the market did.
Or even if years and years. But the one thing to think of too is say you invested this $10,000. I mean, like 6 months ago when the market was at all-time highs. Now you're in a terrible situation because now the market's starting to fall back down. Whereas if you're dollar cost averaging, you're being able to get that high price, but also being able to take advantage of these low prices that we're at right now.
Especially with the volatility we're seeing right now, this would be very important for someone just getting out, started investing either in a regular brokerage account or an IRA.
Yep.
So speaking of getting started, how much does someone need to get started? What would you recommend?
Yeah, so you could have any amount. It does not matter. As long as you have some source of income, then you are able to start a Roth IRA at whenever you want, and it's at any age too. Some people think you have to be 18. You can be any age. You can be below 18. You probably just need your parents' help with that. And then there's also an income limit, or I mean, how much you can contribute to your Roth IRA per year. I believe it was 7,000 last year, but I think they changed it to 7,500 this year.
Interesting.
Would you recommend doing monthly contributions, like semi-annually? What would you recommend?
I would probably do monthly. That's how I would start out. I think that's how most beginners start out, is just putting in a certain amount per month. And many people will tell you to max out your Roth IRA, and that's where you contribute the most that you can, and that's definitely a good idea as well.
I think too, if you have a job, obviously, I think contributing paycheck to paycheck.
Mhm.
If you find a certain percent that you're comfortable with putting in, I think putting it every paycheck is a smart idea as well.
A lot of college students also might be hesitant to start investing in a Roth IRA because most of us are only 19, 20, 21, and the thought of not being able to touch that money until we're 59 and a half might be a little bit discouraging. So what would you say about that?
Yeah, so the money that you put into your Roth IRA, the money that you contribute, you can pull out at any time without any taxes or fees. It's just the money that you grow compounded interest on that you earn. You can't, or else there will be taxes and fees. But at any moment, you can pull out money from your Roth IRA that you've contributed.
Yeah, and you're really getting a head start than everybody else as well. You're putting this money to invest into your future. So when you're retired, then you have income to live off of.
And then lastly, any tips or mistakes that you would tell people to go for or steer clear from?
I would just say to start early. Definitely start early, as quick as you can, because obviously people say you should start early with investing because the longer you have your money in the market, the longer it grows compounded interest. Yeah,
I personally, yeah, I agree with that. Just start early.
yeah.
I think that's probably the best component.
Awesome. Well, that about wraps up our daily market podcast. I hope you have something to take away.